And so like I came like across a very interesting like sentiment on LinkedIn where someone was admitting that at like that stage of their career they'd like advanced to post articles. So this person was a CASA and they were admitting that at that stage of their career they still didn't know the difference between a private equity firm, a venture capital firm, and other funds and what exactly they do. And I found that extremely astonishing. I found people co-signing that extremely astonishing because a lot of people were coming up and saying stuff like, yeah, me too. What do they do anyway? And so I wanted to kind of pivot our discussion around that today. And before we start pivoting our discussion around venture capital and private equity, I first kind of want to define them and just different funds and give a general definition. There's tons of stuff on the internet you can look at, but just to explain the different types of funds, there are lots of types of funds and they take forms in many ways, but like the big ones that we know of are asset managers. So asset manager is typically a financial services institution like a bank, and they have a separate leg where they invest their clients' money into a portfolio that they deem fit. So that's all they do, nothing complicated about it. And then there's the offshoot of that, hedge funds, which in modern times at least are very similar to asset managers, but because they have less restriction and less regulation surrounding them, they're freer to do what they want with the investors' money. And so they can partake in like activities such as short selling stocks, invest in different derivatives that normal asset managers wouldn't be able to invest in regularly, and just a whole ton of other stuff that normal institutional investors just wouldn't be able to do, under the premise that these are for super wealthy people who understand that they're taking on like a super risky investment. And they give like high amounts of just capital. And then, oh yeah?
Yeah, for me, like, I think I just want to go back to like when did you like start and like when did you know about like PE firms, venture capitals? Because like for me, I think like the earliest I could think back to like when I started hearing about these things. I was watching a show called Silicon Valley. I don't know if you know it.
Silicon Valley,
Yeah. Like that's one of the like first times, and like I mean you see like so many things on like TV. It's usually where we learn a lot of things, and you know you have startups, and then like where they go and they like pitch for funds and stuff like that. Then you come across like PE firms or venture capital. So like that's kind of where I started on a base level, and like hedge funds. I mean, you look at things like Suits and like they bring all these things to account, and I think it's really interesting to see like in like your everyday life where you can come across these things and how like finance is just integrated everywhere, man. And like unless you go deeper into it, it kind of comes across as like this niche world, and
this
where
complex
where like there's just a bunch of nerds chilling and like you know having their book clubs and stuff.
Or it comes across as just super complicated, which it can get, no doubt. But it really is just basic concepts. Like private equity, as I was explaining, private equity is basically the same, but they aim to kind of invest in companies that they feel are undervalued. They may sometimes change the management and stuff and get those companies operating at a big enough level so they can do what we call flip them, so they can turn them over for a profit. And venture capitalists are just private equity firms with like a niche focus on just new companies, new exciting and innovative technologies. And like Randy mentioned, they're very prevalent in Silicon Valley, the series and the place.
Angel investors? You want to explain that one too?
Yeah. Angel investors are like your first investors, the people who really ride for you. You think of them as like,
day ones, bro.
They're the day ones. Like when you're at your most riskiest and no one is really backing you, they're the ones who are willing to take the risk. It's one of your first rounds of investments in your company. And I think for me, what was interesting is, like Randy said, we see this a lot in popular media via Silicon Valley or Billions or Suits.
Even the PE firm that like managed like Liverpool. Talking about that like one of the earlier podcasts.
We did talk about that. And I'm actually going to dive into that in a different sport actually.
Oh, okay.
You see this being applied in like an American context, and you really kind of like cast your mind there, like, oh my gosh, this is only something that happens in Silicon Valley. You never really think about it in a South African context.
Okay.
And usually these are kind of used to solve like very not very big South African problems, but they're used more and more in South Africa because banks are becoming more and more risk averse. So banks just don't want to give out capital like that anymore. They deem it too risky. And so obviously this capital has to come from the private market for these newer ventures, and that's where these venture capitalists come in. And you see it in a variety of contexts. And with the sports reference, it's no secret that rugby South Africa right now is going through like it's just a sandstorm of finances. It's just underfinanced. The organization is a bit shaky, and there's just no money there. And the impact of the coronavirus has only made that worse.
Yeah.
And so there's been this whole debate in Rugby South Africa about private investment in rugby. And I don't know how you feel, Randy. There's been this huge hoo-ha where they want more private equity firms to kind of invest in rugby, but like more rugby traditionalists are saying no, they don't want that. They feel like it'll dampen down the integrity of rugby and the brand of rugby. And I don't know, for me, it's like
I think one thing like I'm really bummed out about is like, okay, so I mean, if you watch Super Rugby, Australia got their Super Rugby running again. New Zealand, they got their Super Rugby running again, and like the funders of them. And I'm not really too clued up on like previous like funding and finances in rugby. But I mean, let's look at like some of the successes. Let's take Liverpool, man. You know, that's a very good example. You know, I mean, we don't question the integrity. I mean, to the basic person, the average person, they don't know who owns a club or like,
They really don't.
You know, I mean, like I'll go back myself like 5 years ago. I mean, when I saw Etihad, I was like, oh, that's a pretty dope name. I don't know it's associated, you know, to somewhere in the Middle East, and they have their own airways. They have like so many different clubs. I mean, I came across a club, I think in America. They have an Etihad Stadium in America for basketball team.
Really?
Yeah. So basketball, football team. I don't want to get it wrong, but one of the two. And it's like they're everywhere, you know. And like the average, and I was doing finance. I'm doing a finance degree, you know, and I still don't know that, you know. And then that's a bit crazy, you know. If like, but then that's my passion anyway. But like to the average person, they don't really know. I mean, who owns Manchester United? I know it's a family, it's a certain family, but the average person wouldn't know that. So like, it's as long as obviously it's good money.
Yeah.
You know, and it's a good way to fund rugby. I think that there definitely needs like more backing. You know, I've had like daydreams where I'm just like, yo, man, if I could like sports in South Africa, you know, sports in Africa, it's like tremendously undervalued. You know, we could really like bolster like the youth programs and the current professional leagues, bro, because there's so much going on. There's so much talent in South Africa, you know.
Do you think
underutilized?
Can I cut you off there? Do you think within a South African context, investors would realize like a return on sports? Because for them, it's about how much they can commercialize it. It's not about. I guess it is. I guess there is.
But like, you got to start somewhere. That's my thing. Is that obviously like 5 years, like nothing that's short term. Obviously, I mean, if you want to like get good, it's like next 5 to 10 years.
I think that is like an kind of like the DNA of private equity firms. Along with them, a lot of them are in it for the long game. And so I want to ask, just staying on sports. So like yesterday, I don't know if you've been keeping up with this, but there had been a bid for Newcastle United by like Middle Eastern group, and then the Newcastle United fans were very excited about that because they're very unimpressed with their current owners. And so the deal was kind of being stalled for a couple of months because the Premier League was taking time with their deliberation. And basically there were just concerns around
financial
the investors'
stuff,
integrity, their respect for human rights, because it's not too pretty. They were involved in piracy scandals, and the Premier League was just really, really concerned about that. So I want to ask you, in like a sports context, how much do we separate the investor from the actual team? Because the fans, like you said, came out yesterday and said, we don't care about the investors.
You
know, so how much does that separation exist? And does it set a precedent for like sports investment?
I think it's like the relationship is really like, there's no standard for it, you know, because I'll give a good example. New York Knicks owner, right? A guy has a negative light by the public.
Yeah.
Like people like Stephen A. Smith on ESPN,
Yeah.
like that guy's getting shunned and stuff, right?
That guy's a meme.
Yeah, and well, the NBA isn't forcing him to sell his team,
Yeah.
even though they're willing buyers, and the fans don't want him there. Like literally, the public doesn't want him there, but he's still owning it.
It's quite a hot topic, just around the world with regards to sports financing, but bringing it back to PE and venture capital, especially within South Africa, I think post COVID-19, we're going to see a lot of funds having a bigger responsibility to play with regards to the development of South African business because government can't carry that on their own. And obviously, banks, like I said, are very risk averse. And it's interesting because it's an area we've seen continue to grow just year on year on. I think the funding in venture capital and just private equity is just continuing just to grow exponentially, even under tricky economic conditions. So before COVID, one would consider 2019 in South Africa just a very tricky year economically, and still we see these private equity and venture capital firms grow. How do you think like they can kind of contribute in a South African context?
I think understanding the landscape is super important.
Yeah.
And how sports is different. Here. I mean, if we have like we went to boys' schools, we see the big sports.
Yeah.
And like let's say football. As much as we love football, in SA they call it soccer. But like I have my views on that. But like you have to understand like the major players.
Yeah.
Rugby is a very big game in South Africa. So is cricket. And understanding, first of all, preference for people to go to stadiums.
Yeah.
If you look at like PSL games, it's usually half filled.
Yeah.
It's like now post COVID, what are outlooks on that? And how would you then get more people to come to stadiums? Because the point is, and then see how many people buy shirts.
Yeah.
Really doing a lot of market research. In terms of in terms of really getting to understand the market and how sports works in South Africa, because sports in South Africa is way different to the rest of the world.
And I think that's applicable not just to sports, but
Yeah.
to any business within a developing market.
Yeah.
I think
Understanding the market is important.
my big thing, especially with just outside investment, is
Yeah.
the danger that they face is that they often miss opportunity because they try to measure where they're trying to invest, especially
Yeah.
in developing countries, in metrics for completely different economic climates.
So applying systems that will work in developed countries
Yeah.
in emerging economies.
Or kind of making decisions off of them. Where, obviously, if you use Western country economic metrics and you're trying to come and invest in a venture in South Africa, it's gonna seem obscenely more riskier
Yeah.
than if you did within a Western context. But I think the trouble there is you kind of then just leave behind a lot of value that you could be driving in the economy and value you could be driving for yourself. And I see that a lot with South African businesses too, where or South African PE firms or venture capital firms, where we measure value by we measure this huge value by using metrics from outside of the country as opposed to what we're exposed to now. And just outside of sports, I think there's a lot of interesting businesses. There's a lot of interesting business to take place, but traditionally, and that's a big criticism that venture capitalists have in South Africa, is they want to invest in someone that has failed before. So they want to come in and you, Randy, say, I'm on my third startup now. I've learned lessons from my 2 startups and now I'm committed. Do you think that's fair?
Honestly, I do think it's fair.
Yeah.
But it's also in what context? Again, because that model works perfectly. Again, we just spoke about this in the West.
Yeah.
In SA,
but they don't want to take the hit, though. Would you want to take the hit? Would you want to be the investor that takes the hit with an inexperienced management team? That's the chat.
I mean, that's part of the added risk, is it not?
It really is.
So, personally, that's the risk I'm willing to take because it's a different environment.
Yeah.
You also have to understand, the entrepreneurial nature in South Africa. And again, how risk averse everyone is. So I mean, if someone fails once, do you think likelihood of them starting another startup?
Do you think?
I think they have to adjust that.
I get you. That funding kind of criteria.
Yeah, funding approach. Yeah, innit? And because it's like it works, but it in South Africa, I don't know.
A big criticism as well is that the things that they think look promising, venture capitalists say the things that they think look promising are businesses that mirror what is already existing in Western countries and are businesses that mirror what's already unicorns in Western countries. So
Yeah.
it's just like, what's the point of investing in this if there's another thing just like this somewhere else that could come and just tear down the business model? Do you think they're looking hard enough?
I don't think they are, because I think you know what the best part is.
Yeah.
Is that, I mean, I think you spoke about this one time where you said that a CEO of Twitter wanted to come here and live here for about 7 months. You know, you just scope the landscape, you know, how people work, you know, how everything works, and I think that's really important, because then you kind of adjust your view. Again, it goes back to the whole understanding your market, you know, because we're fairly different to the West. So there's certain things that wouldn't work here. I mean, we saw Starbucks, and how that failed. We saw
Domino's,
yeah, that just closed down, you know, and how that
Burger
failed.
King is struggling.
You see, it's because it's the whole globalization. You come here, you take products, you try apply the same metrics, you try apply the same systems in the West that you would in developing markets, and it's not going to work because we work totally differently. You know, you have to understand also the lack of infrastructure, you know, and now factoring that in to your investment ideas.
Yeah.
So factoring those options now, as like a system like e-wallet, how, you know, the banks have all adopted that, and how that was a great thing.
Yeah.
You see, because it worked so much here because not a lot of people are banked.
Yeah.
So the ease of using that, and look in East Africa, you know, most people there use
stuff like that,
you know,
to get money. Yeah.
You see, so if you ventured into something in that nature, that would be a great hit, because that's widely available. Then introducing an Apple credit card to that market is not going to work for you, because they don't use cards.
I also think they need like a whole lot more. I'm gonna say a continued different approach to the point where you become cognizant that you're operating in a country where entrepreneurship is a very kind of not a new thing, but we're all scared to venture into entrepreneurship. And so if you want to invest in a company and a bright idea, you're going to want to supply more than just your capital and a manager or two within the management structure. But you want to kind of also grow that management to kind of help them. I think that would also help South Africa a lot if we had like firms and funds that were committed to seeing just bright ideas with just new, fresh faces who kind of still need to be developed and who are willing to develop those bright faces to kind of make something meaningful. I think that model could work far better than just kind of coming in and saying, I think he's just got the best management experience and he's failed 3 times, so I'm going to invest in that. I think if we invest more in just people as well.
And that's where the gap is, because if you look at the funding structures in South Africa, you need to really be formed. But in America, it's like, we'll find your idea.
Yeah.
And now you want someone that's failed 3 times, but the infrastructure in South Africa doesn't allow that. If you get what I'm saying.
Yeah.
So now, how would you best fit into that gap is where like PE firms need to be looking at.
Do you think a criticism of you and I's discussion right now is, do you think we're looking at private equity firms to play a role that a government should be playing within entrepreneurship? I think we're looking at too much from them.
I think, okay.
Because at the end of the day, they just want returns and create value for kind of the investors.
And I mean, they come in with an exit value, you know, in mind. So yeah, we'll take that into account. But I mean, if you think about it now, especially in these times, PE firms, which have been hoarding cash, you know, to invest in a lot of ideas and a lot of undervalued companies. I mean, they're primed right now.
Yeah.
You know, you also look like at established firms like, you know, Berkshire, which held the cash pile right now is crazy.
Yeah.
You know, so things like, and that's market sentiment. There's a lot of people just hoarding cash, waiting for the right ideas. And I was reading up on a couple of things this morning, and how now PE firms and venture capitalists, the urge is on them. Like they're getting pressure on they need to play their role, you know, in the sense of pushing investments.
Yeah.
You know, because governments is, as much as they can do, they're focusing on, you know, COVID-19 and really economic stability, you know, and how do you create more jobs on the private side, man?
I also think for a lot of them, especially in the West, government's efforts to stabilize the economy have really heavily benefited them. And I feel like it's, I guess you could call it like a moral incentive or anything, or moral just thing, but I think it's also pivotal that they reinvest what's been invested in them through this pandemic into just their respective markets and to create those jobs. Because I feel, especially in South Africa, there's so many ideas. There are so many ideas we can execute that are so unique to the South African marketplace, where we don't have to emulate anything that side. That given the right time, given the right touch, given the right detail of attention, and given the right team, given the right investor, could blossom into these big things. And I repeat my sentiment from a couple of conversations ago, as it would be really sad to see someone from the other side of the world come in and develop these huge South African solutions for South African market, for stuff we could have done ourselves, just because we're very risk averse, or just because we use a different criteria to evaluate investments. I think that would just be really, really, really depressing.
And I think it's already happening. I mean, I think I read something on Sweet, the company Josh was talking about actually.
Yeah.
Sweep South, is that the company?
No idea.
The insurance company. They just got funding from another company, another venture capitalist company.
Yeah.
Actually, I forgot the name. And I mean, that's. I mean, Frank got funding from that round that they did as well. You know, and that's they got about 300,000. You know?
Really?
Yeah. So it's like that's already happening. You know, it's like they have to look to external and to the West and Europe and Asia for funding, because well, there's not enough capital here. We don't have enough capital to play around.
Yeah.
You know, and even if the capital that we do have to play around, it's so restricted in the sense of how it gets allocated.
Yeah.
You know, and the criteria is, again, it just doesn't allow for, you know, the kind of stage of, you know, I'd say entrepreneurship we're in.
I saw this crazy article this morning as well about 1,500 new hedge funds in the month of July being started
500
in China.
Oh, that's
bro.
That's massive. That's massive, especially in the context of Africa.
Yeah.
I think crazy amount of funding then's going to follow through. I mean, that's the case.
And China is not too risk averse. They go in.
They have.
They go in hard, and I know it's a big political argument, and that goes back to our discussion on just like the underlying things of like who's investing in you. I know that's also a big kind of morality argument of some of the more unsavory practices they have in their marketplace. Are we going to allow that to sweep in just because we want their money? Are we going to say, yeah, that's acceptable just because we want their money? I think it'll be very, very interesting to see. Do you ever see the banking sector becoming less risk averse, or do you think they're going to come a bit late to the party?
Okay, I think first of all, I think they are going to come a bit late to the party because of that nature. But now this is where I actually have a question for you now.
Okay.
So you're speaking to me about, you know, the whole balancing of should we go with the money or social impact, ESG, you know, ethics.
Okay.
You know? Now with what we've seen with funding from the East,
Okay.
you know, and the scrutiny behind that, you know, and now with what you just said, you know, the hedge funds being created and coming in, what's different to that than the funding that, you know, African countries have been accepting from the East at rates that they possibly wouldn't be able to repay them. You know, now with those companies coming in, would they not face the same scrutiny? But then why? I think what I'm trying to get to is that I think it's viewed differently in Africa.
Yeah.
So ethics and stuff, do you think that is viewed differently in Africa in terms of landscape of discussing, okay, where's that money coming from?
I think definitely, because often when investments from that side happen in Africa, they happen for a lot of infrastructure. And so we tend to kind of relax our lens on looking at that, because these are infrastructure things African countries really need. And so African countries are very cognizant of the human rights violations going on, or the ridiculous loan terms, or the labor being used to kind of build up their country. I think that's something they're very cognizant of. But they start viewing it as a necessary evil because the economic climate and just their leadership and the political instability hasn't allowed them to develop to a rate where they need to be, especially to interact with the rest of the global economy right now in the 21st century. And that comes in with like, I think we're going to see an interesting thing about this discussion, a lot of technology from China and African countries solely because it's cheaper and it just can get in here more quicker. There's less regulation around it. And I think that's going to take place over a more westernized approach solely because, like I just explained, it's cheaper and it's technology we need to kind of interact in the global economy and exist in the 21st century. So long story short, or long story less long, I think the line becomes more blurred as you begin to need a specific amount of funding. So for Newcastle United, it's a football club and it's entertainment, and it's already got an owner who's a billionaire in the UK, even though they have a bad relationship with them. And so they don't really kind of need the money. It would be good to have and they'd buy all these cool players. But in South Africa, I think it's different. Or in Africa in general, I think it's different because these are often infrastructure decisions. These are often building kind of economy decisions as opposed to a mere football club.
So we're not upholding the same standards then,
I don't think we are.
and now with that being said, as a stepping stone onto the next thing is the hesitancy because of corruption, as a part in PE and reluctancy because of that, and how that plays, because
A reluctancy in what?
like let's say for example with Huawei, my thoughts here is Africa is becoming a huge playground in terms of political plight between the East and the West.
Yeah.
And now we're seeing this come into to effects with like things like Huawei.
Yeah.
And them being banned, and in that sort. Now I've seen, like, I've been on Twitter.
Is Huawei purely a ethics thing, especially in the West?
I'm saying
purely
a race for
ethics
5G
thing,
and all. I mean, there's so many
Is
other
it a
things.
competition thing?
Yeah, I think it is. Because it's if you control the network, then you control, I guess, the world.
Yeah.
In a sense, because you control data.
Yeah.
And how fast it can move, and that's a big part. But that's besides the point. I think what I'm focusing on is what I've seen is, I recently went back on Twitter. I've been there for not for too long, but I've seen a lot of influencers like ripping Huawei, and doing a lot of those like what influencers do, and like rip their products and stuff. And it's a whole lot more than what I've seen in the past, and them gaining market share, and taking a market share, right? And now, how does this now? In terms of, if we take it back to PE firms and all these other funding sources, now with what we've seen with PE firms and all these funds from the West, now with what you just spoke about this 1,500 hedge funds that have been formed in the East, now it's going to be another battle. And now what's going to happen in terms of ideas and outcomes in Africa?
I still think, honestly, I think there's just a bigger chance that ideas will get funded.
Yeah.
If all of this additional capital, because obviously 1,500 hedge funds starting means that there's a whole lot of capital going around. There's a whole lot more capital going around that wasn't going around before. And this may be due to kind of maybe China fending off COVID-19 and markets rallying and so forth. But I feel like it puts African ideas at an opportunity to kind of get more capital, because I think the US is getting to a stage where everything that can be done has been done. I mean, sure, there'll always be new innovations and stuff, but especially in this cycle of technology, everything that can be done and stuff and ideas are just becoming redundant.
And it's like, even if you look at like Apple,
Yeah.
like okay, let's be honest.
The iPhone hasn't changed since iPhone 10, guys. It's the same phone. I'm sorry.
Like, there's nothing groundbreaking.
It's the same.
And listen, guys, to put it in perspective, we both use iPhones.
Exactly.
So we're not hating. In a sense, we understand. And I was like a Android fanboy, huge Sony
Really?
fanboy back in the day.
I can't imagine.
Yeah,
that.
man, I was huge. I still am. But
No, you're not.
I am, bro. Just,
No, you're not.
Don't mind me.
No, you're not.
So the issue is innovation, and what we're seeing in the East and what they're being able to do now. But now, taking back to what we just spoke about, is that I think we're the biggest winners and losers.
Definitely.
Because sure, we great benefit from all this funding of ideas and everything, but they're going to take the rights to it, because
that's exactly what our discussion pivoted towards on our first conversation like this. It's another form of, we call it colonialism, which is harsh, but it's another form of control of some sort.
And the huge part is also the education barrier.
Yeah.
And it goes back to this entire thing of like this notion that goes around with like deals with record signings, not reading the contract and what it says. And then when you get like 10% of what you made, then you're like, oh my gosh. So like when you don't own your masters anymore, then it's going to be a thing of like, well, it's in the contract. It's legally binding. You signed it. Because you got that big upfront payment. And also now a big thing is that SA funding is going to take a big hit because of that. Because then it's going to be like a whole thing of like being late to the party.
Think there's enough capital around to kind of cover what outside investors could come and do?
No.
Let's say everyone is just not risk averse anymore. Everyone was like, I'm taking on risk. I'm investing.
Hypothetical situations. Yeah. I don't think so. But we can start, because how do you get more funding? Well, how do you create more value? You'd have to invest.
Yeah.
And it would take that return and reinvest it. So capital only comes from investing. And not only, but in this sense, where in order to get more, we'd have to create it.
Yeah.
And if we're not investing into ideas, we're not creating value.
I think it's something to think about. I think it's something just to gander on about. Nah, man, you've definitely given just me something to think about. And I think, on that note, we'll end this episode off. Thank you for tuning in. Tell us what you think on Instagram and on LinkedIn. Check out our new podcast we just launched. It's called Startup Stories. It's about startups and their stories.
Yeah, I like that segment you did there.
It's about startups and their stories. Check that out. We have some new exciting stuff coming soon.
Very soon.
Very soon. So just check that out, and thank you. Keep safe.